by the way.
James.
Deeper than I thought.
Yeah.
Did they give us a green light to start?
I imagine someone will get off.
Hello. Is on.
Yeah.
Okay, so I think we are going. Okay. Good morning. Good morning, everyone. I think we'll get started. My name is Nakul Mehta. I'm one of the managing directors here at Clear Street. I help lead our blockchain investment banking practice, and I'll be moderating this next discussion focused on the new money movement, how stablecoins are disrupting payments. We have a great panel joined by Alex Wilson, head of crypto at Shift4, Philip Lord, president of BACT, and James Gernetz, CFO of Exodus. So maybe let's start with quick introductions. Sure. Alex, if you can kick us off.
Yeah, sure. Hi, everyone. Alex Wilson, head of crypto at Shift4. Actually joined Shift4 through an acquisition, started my own crypto company that got acquired by Shift4 about 3 years ago. And ever since then, I've been building different crypto products at Shift4, everything from paying with crypto to merchant settlement solutions and stablecoin payout solutions. So thanks for coming today.
Cool. Hi, my name is Philip Lord, president of BACT. We're B2B infrastructure for crypto exchanges and payment infrastructure listed on NYSE.
James Gernetsky at Exodus. We are a digital asset platform, began as a multi-currency or multi-chain self-custodial wallet. We support essentially all of the major stablecoins, and all of the ones that aren't major on all of the chains. So great to be here.
Great, thank you. When it comes to capital markets activity this year, it was pretty heavily dominated by digital asset treasury companies. But when it comes to private capital markets and M&A, I think there's no doubt that stablecoin related companies have been the most active in terms of capital raised as well as acquisitions, et cetera. So would love to get your guys' perspective from your respective seats. What do you think is driving interest in and demand for stablecoins?
Sure. Yeah, I can kick us off on that. So as a payments company, Shift4 is a traditional payments company. We really try to meet our merchants where they are and their consumers. So we've seen a huge increase just in stablecoin demand as you've seen the stablecoin and crypto market caps increase over the last years. So we have a couple different ways we've seen that demand pop up. One is, our merchants are coming to us saying, hey, we have someone who wants to book this hotel room, paying in stablecoins or crypto. Or we have merchants coming to us saying, hey, we'd actually prefer to get settled in stablecoins rather than a bank wire at the end of the day. Or even some merchants who want stablecoin rails to do payouts and refunds and other sort of cross-border remittance use cases using stablecoins. So a lot of what we do is driven a lot by the merchant demand, and we're certainly seeing it every day more and more. So it's been an exciting time to work at the intersection of stablecoins and payments.
Yeah, and maybe just a quick follow-up to that, actually. So Alex, the demand that you're seeing, is it mainly cross-border use cases or domestic? Or?
It depends on the market. So if we think about, let's say, the US, European market, it's often like a remittance use case, right? So the typical corridor is US to, say, South America, Europe to Africa. Those types of remittance flows, we're seeing what people call often the stablecoin sandwich. Right. So we see a lot of that. If you're thinking about things like paying with crypto, though, you're not seeing that at your local coffee shop. But you might see it for some really big ticket items. Like here in Miami, you could buy an apartment using stablecoins or crypto. We work with companies even like Blue Origin. You can pay for your ticket to go to space paying in crypto.
Right. Okay. Philip, James, any thoughts on from your respective seats? What do you think is driving demand?
Just obviously international demand for USDT is just a crazy amount. We've seen obviously the growth in that. Just at my previous company, Ubit, which is effectively Apple Pay for crypto. It's not launched yet in the US, but it will be launching in December with Backed. But basically, it allows you to spend for everyday payments, which is one of the pain points at the moment. But they're going to launch USAT. I think it's going to be huge. It'll be very disruptive for Circle here. I think the guy with the biggest checkbook tends to win. And Tether has a very big checkbook. So I think watch that space on Circle in December as USAT goes out. Outside of the US, everybody uses the US dollar, right? So this has just solved so many pain points, and it's very inefficient. I transferred money back for myself from one of my US accounts the other day back to my European account. It took like a day, and I got charged a massive fee. That shouldn't happen, right? That's like a real pain point for consumers, and whether it's Mexicans sending money home or vice versa. It's a big pain point, and stablecoins are solving this, and it's going to be very, very, very disruptive to, not only, companies, but very disruptive to the banking industry here over the next year. We're launching a new product in the new year where effectively you'll be able to instantly transfer to 90 different countries. So we're excited about that, but that disrupts companies like Venmo, it disrupts the banking industry. We're going to be B2B, so we're going to sell it to wallets, and you can, I think when you look at Revolut and N26, they're much better products than you have in the US currently, so.
I think I would echo some of those thoughts and reinforce them. The first one is for the bankers in the room, if you've ever had a deal that relied on a wire and it got stuck at a correspondent bank because it was an international deal and it took an extra 3 or 4 days to close, you definitely know the pain. That could have been settled in under 30 seconds if it was with a stable coin. I think from an Exodus perspective, we see crypto usage worldwide. It depends a little bit on just different geography. For example, like in Nigeria, for example, that's that economy, they're big into Bitcoin. But then if you go to, say, Argentina, they're going to be big into stable coins because of challenges and things with the local economy, local currencies, et cetera. So there definitely is a use case for cross-border payments of all kinds, whether that's business payments or remittances. And then in the local economies as well for stablecoins. I think that where I believe that they're going to see a lot of traction is just with the recent legislation in the United States. If you're paying attention to the Genius Act and when it passed the Senate, and all of a sudden it looked like there was going to be a clear path, which there was, to becoming law, you'll notice that the Visa and MasterCard, that their stock was down 5% that day. Because people realize that stablecoins are much more efficient, and as a merchant, receiving a stablecoin payment is leaps and bounds better than receiving cash, but definitely leaps and bounds better than receiving Visa or MasterCard payments. Because right now you have to pay up to 3%, and then it settles within ACH. So if you have a big Friday night and you're a bar and you have a big Friday night and Monday's a Labor Day or something and you have a holiday, you're not going to see your money until Wednesday. Whereas if you got paid in all stablecoin, and you have to pay 3%. So if you got all stablecoins, not only would you get 100% of that, you'd get instant access and you'd be immediately able to use those funds to purchase inventory or do whatever. So I think that now that's not going to be, not to say that Visa and MasterCard are going to be disintermediated. They've been working on stablecoins for a long time. And so has, say, JP Morgan and some of these others, no matter what they might have said publicly. So I think that you'll definitely see the big players have been researching this and they have been getting into it. And that's why with the legal and regulatory changes that you've seen in the United States, I believe you'll see massive adoption, probably much more quickly than just about everybody in the room thought possible.
Yeah, James, you hit on a lot of key points, regulation, and then the fact that MasterCard and Visa stock went down. There are now obviously rumors that MasterCard is close to acquiring Zero Hash, which is one of the big stablecoin orchestration platforms. They basically solve for the stablecoin sandwich that you referenced earlier, Alex. So let's talk a little bit about the payment stack. When it comes to traditional payments, that flow, and then what piece of the stack do stablecoins disrupt versus what will not be disrupted? Would love your thoughts on that. Maybe Alex, you can start.
Sure. I mean, as these other guys mentioned, Visa and MasterCard, for example, have their own crypto and stablecoin teams. I think they're a good example is if they do nothing, they would likely be disrupted by stablecoins. But there's no reason that these players that are sort of the middlemen of today in finance and money movement can't play a pretty big part in the evolution of stablecoins and being part of that. I think for companies like ours, like Shift4, a payment processor, we're in a unique position where it actually benefits us quite a bit to adopt stablecoins and adopt different crypto rails because we have great distribution to merchants. And for us, we just view it as another payment rail, right? So we're sort of agnostic to which payment rail gets used. We'll use and offer whatever our merchants ultimately want. And I think it's not even necessarily certain layers that get disrupted. It's more that each layer could adopt stablecoins if they wanted to. Some might become redundant, unnecessary altogether. But the banks, Visa, MasterCard, all these different card networks, as long as they adopt stablecoins, they can probably hang on for a pretty long time.
Yeah. Philip, James, any thoughts on the payment stack and how it's getting disrupted?
Yeah, I think that we've hit on already the major, the easy, the low-hanging fruit, if we will, which would be remittances, cross-border payments of business kinds, and then the from the merchant perspective. I mean, they're all highly incentive. I think the nut that people are really trying to crack is just on the retail side. I hear a lot about, well, what about your rewards credit cards? People are not going to want to give up their rewards. And I think that the merchants have been pushing back on that because they've won, in the US anyway, when I go and swipe my card, a lot of places nowadays will charge me an extra 3%. So, anybody's doing the math of, okay, I'm going to get 1.5% cash back, but I have to pay 3% to get it. That doesn't make sense. So I think that the value of rewards cards are slowly getting diminished, and there's settlements out there. And I think that the merchants will have rewards they'll incent people to pay with stablecoins. But that's still that's still a tough nut to crack. And that's what we at Exodus are actively building towards. We are a consumer-facing platform, and we believe that we have certain ways and we approach to solve that. But that's going to be the next thing is getting just mass adoption from a retail perspective.
We're not in this business, but I think the gambling industry, we've seen massive disruption by stablecoins. You've had obviously companies like Polymarket where you do spread betting. But, if you look at the top casinos like Stake and Shuffle and Bit Casino, they're all using stablecoins. And the reason why is there's no chargebacks, right? That's a huge amount of volume because, the world does like to gamble. I think the UK has a lot of Betfair and all of these companies. They're getting a massive threat at the moment,
Right.
Yeah. Really quick, I think on that point of chargebacks, I think that's sort of under-discussed often.
Yeah.
Right, especially for high-risk industries or kind of high-end luxury, kind of big-ticket items. Right, so we hear that all the time from merchants that one of the drivers, of course, is their customers saying we want to pay in stablecoins, we want to pay in crypto, but then as soon as they hear there's no more chargebacks, their eyes really light up.
Yep.
For them, that's a huge money saver, just as much as it is, let's say, having a lower processing fee on the transaction itself. So when you combine those two, it really is pretty powerful for the merchant.
And a gambling company is going to get charged like 7-8%, right?
Yep.
The process. So and then you add chargebacks in it, it's like a huge saving for these gambling companies.
Yep.
And they can do bigger volumes as well because everything's getting through.
And yeah, I think on the luxury side, that's actually a great point. I heard from a broker for private jet travel. Unfortunately, I'm the CFO, so I have to watch our spending, and I don't get to fly private. But we've absolutely. But I met him, and he said that he literally will pushes people towards stablecoins because the chargeback risk on a $100,000 PJ flight is it's a real issue for them. And I've heard that there's high-end luxury stores, some places around the world that won't take Apple Pay because of the fraud and chargeback risk, where if you have instant final settlement with a stablecoin, you'll take that all day and avoid that chargeback risk. So that's a great point.
Yep. When it comes to merchant adoption, are you guys seeing any demand beyond stablecoins? Is there a demand for pay by crypto, non-stablecoin? are people interested in paying with, Bitcoin, Ethereum, Solana, et cetera? Is there demand on the consumer side for that, demand on the merchant side for that?
For us, the majority is definitely stablecoins, especially in the US and places where, spending your Bitcoin is a taxable event. Outside of the US, places like Dubai and Singapore that have either no or low capital gains taxes, we see more interest in spending things like Bitcoin, but it still tends to be sort of the luxury market, like buying an apartment, buying in a car, renting a private jet, things like that. Funny enough, the business I sold to Shift4, the Giving Block, actually helped charities take crypto donations. And in that case, it's the opposite actually, where it's mostly donations in Bitcoin and cryptocurrencies rather than stablecoins because they want to donate appreciated assets. So that's sort of maybe the one exception or the one industry where it's a bit different.
Got it. Any thoughts?
Yeah, on my previous company, Uber, was that they've got a huge amount of users just spending day-to-day transactions, and they've got very godfather shareholder from Tether, and Tether wanted to get fast adoption of Tether Gold, so they basically give a reward system the same way that shops gives discounts for with their credit card partners. So they've claimed a lot of users, and I think that's going to that was at the start that was purely for the crypto ecosystem users, which was 100 million. Now obviously we're growing exponentially, and I think there's going to be a lot more use cases. I think we're going to see so much disruption in the way people spend as USDC, USAT, Tether's new stablecoin comes in next year. So I think it makes a lot more sense to people might not even know that they're actually spending these stablecoins as well. That's where it's good.
I would echo the charity and there's places where you use the dollar. The only thing I would add is just like places like Nigeria. If you have an existing payments infrastructure that's based on non-stablecoin crypto, that will continue. But there's not a lot of places out there, frankly. So. And then emphasize the idea that you won't even know you're using stablecoins. I mean, we are actively building platforms that have that user experience where you won't even necessarily even know that you have stablecoins, because in the world where you have an Amazon dollar and a Walmart dollar and a Target dollar, you shouldn't have to care as a user what it is. You should just be able to receive it as whatever it is, especially if it's Genius Act compliant. You should just be able to receive it, see $100, and then pay it out in whatever people want as $100 without even knowing. So agree with that 100%.
Okay, so there seems to be consensus that stablecoin issuance will proliferate. There will be more and more issuers of stablecoins.
I mean, I hope not, right? I hope this lasts. It goes down to a big monopoly, but I think there's probably use cases for other currencies as well, like Japanese yen. UAE's just they started with an AED stablecoin, and that's pegged 1-for-1 against the US dollar, but they're actually doing a UAE US dollar stablecoin now, right? That just tells you the importance, of the US dollar, right? People want to internationally they're doing a lot of oil transactions in the UAE and that region, but they want to transact in something that's pegged to the US dollar, but outside of the remit of the US dollar.
Yep, more than likely it makes the US dollar a stronger reserve currency and more dominant all over the world, right?
I mean, you couldn't make it up. They buy treasury bills, you can track and trace, and it keeps dollar denominants in emerging market currencies that were threatening to break away from the US dollar. It's a dream trade for the Fed.
I mean, this comment's a little bit out there, but I can see a world in the U.S., especially with Genius, with the it's really hard to overemphasize how much legal and regulatory clarity will allow an industry to proliferate. And I could see it's gotten to the point where I could see that just if you're a big enough merchant to issue gift cards, why not issue a stablecoin? It's essentially the same. It has some of the exact same benefits, but it's much more useful to the user. So I think you'll see a world where you can get to that level.
Yeah, okay. I tend to agree. So let's circle back to the payment stack for a little bit. If you're a traditional payments company like Shift4 is, or if you're an investor in the space and you're thinking about the payment stack and what what benefits stablecoins provide, what are the pieces of the stack that are actually difficult to replicate, right? So why is MasterCard looking to buy Zero Hash, for example, versus just building in-house? Any thoughts on what pieces of the stack are actually difficult to replicate beyond the end, having the end customer and the distribution?
Yeah, I think if you think about the MasterCard acquisition or likely acquisition, they're really buying it for the infrastructure, right? They don't have necessarily huge in-house teams who are going to build out that infrastructure, get all the licensing, figure all that out. But that's very different than I think why, let's say, a payment processor would buy a crypto company. You've seen a lot of people start companies that say, we're going to help merchants take crypto payments, but getting merchants to actually adopt that has been hard if they don't have built-in distribution. So one of the reasons we think a lot of those has failed is because they haven't had that distribution. But if you have a company like Shift4 that has hundreds of thousands of existing merchant relationships, and then you can build it or buy that technology to actually offer those merchants stablecoin and crypto solutions, you've solved for what seems like the hardest part in a lot of those failed startups in the past. Right, BitPay and companies like that have been around for years, and they're still around, but I don't think they ever grew to be as big as they thought they would or people expected. So that's why it's really exciting to be able to launch crypto and stablecoin products to an existing user base. There's hundreds of thousands of different merchants I can go out to and tell them why stablecoins are great. In some cases they're doing it to save money, some cases they're doing it to move the money more quickly, in some cases it's just the flexibility of not being limited by the banking hours. So each region, each merchant category has different reasons for adopting it, but we're at a really unique and great place to be able to benefit from that.
Got it.
Yeah, from our perspective, it's all about licensing. We took over Backed from a management perspective back in April, May this year. And like the reason why is like they've got every digital asset license in the United States, which is really bloody hard to get. Basically, you can get some of them, but if you want California and New York, where the bulk of the rev is, right, it's 3 to 5 years. So, that's the reason why we've been in the B2B. A lot of people want to enter this market now. Pre-Trump, they were like scared of from an international perspective, they were scared of it. Now they want to get fully in, and even if they've got cash, they're a rich company, they're going to take 3 to 5 years to get that license. By which time, it could be a new game, politically wise. So people want to get involved. So I think the biggest barrier to entry is just licensing.
I think from a technology perspective, I think that people don't really have a full understanding of how stablecoins actually work and the underlying blockchains that they work on and the challenges that you have, because it's not just a complete interchange. I know I made it sound easy. It's a problem that I have sometimes. I make things sound a lot easier than they really are. To take an Amazon coin and to turn it into Walmart coin, it could be very hard, because let's just take Circle and USDC and Tether and USDT. So USDC is on, 15-ish different blockchains, so Solana, Ethereum, et cetera. And the same thing is for Tether, right? So if you have Tether on Ethereum, but you want to, pay someone in USDC on Solana, that's being multi-chain is very difficult. It's like every blockchain is like a different operating system. So Bitcoin is like Windows, Ethereum is like iOS, and et cetera. And so to get all of those different operating systems, if you will, blockchains to work together is quite a challenge and requires a lot of expertise that, frankly, the larger players, especially in the United States, they just don't have that in house. And it's going to be a lot easier to do something like buy a Zero Hash, someone who has worked on both sides of those rails, the traditional finance banking rails and the crypto blockchain rails that have all kinds of things that people outside of crypto just don't realize.
Got it. In our discussions, one of the view that we've heard is that the tech is potentially commoditizing, and the value accrual will be mostly on who owns the end customer. So you're seeing a lot of traction with companies like credit card issuers, for example, stablecoin-based credit cards companies like Herein in the U.S., Re.Pay in Asia. But it sounds like what I'm hearing here is that the tech is actually not that commoditized yet. Still a lot of value to be had in building the tech infrastructure. Beyond, we obviously have a few players that have scaled, quite decently. Bridge got acquired by Stripe, Zero Hash now potentially being acquired by MasterCard. BVNK. Rumors were Coinbase was going to take that one, but they're now back in market. So anyway, it seems like the tech, your view, the panel's view is not commoditized yet. Still difficult to build the tech.
They all made it too complicated with crypto, right? You know, we got chains here, chains there, you know, like, you know, you got to, it's really bloody hard to swap all your, you know, coins around to get back to a US, you know, USDT. Yeah. So.
Yeah, I mean, I could see a world where, you know, where as AI advances, but you know that you can code anything, but you can't, you know, Claude isn't good enough yet for somebody like me who doesn't know anything about programming to create a multi-chain cryptocurrency wallet that has any type of user experience that if people will find enjoyable. So, so yes, I'd say that, you know, over time, perhaps there's going to be a threat, especially with AI, but it's the level of complication between, especially with all of the thousands of different types of legacy rails that have been 150 years old, with all of the brand new, you know, blockchains and crypto things. It is way too challenging to be commoditized, in my opinion.
Okay, Alex, any thoughts?
Yeah, I agree. It's going to be a while. I mean, for most of these, you know, more traditional companies, they're still playing catch up, and they're playing catch up pretty slowly unless they're making acquisitions like MasterCard. So I think there's going to be a lot of innovation theater around crypto and stablecoins for a lot of big companies. They'll make announcements that they might do something, and before you know it, it's been 2 years and they haven't really made much progress. So I think we'll continue to see a lot of M&A for these big guys who haven't done much and don't have the tech in-house, don't have the team in-house that could build the tech, and a lot of acquisitions.
Yeah, the big guys have had a lot of announcements.
Yeah. Okay. Let's talk a little bit about tokenization. I think our last panel was on tokenization. Any thoughts on the interplay between stablecoins and, I mean, a stablecoin is a tokenized dollar, but when we talk about tokenizing other real-world assets and how stablecoins interact with that whole ecosystem?
Yeah, I mean, stablecoins are the best and biggest example of tokenization, basically. And I think for everything else that gets tokenized, they're sort of that payment layer, right? So when you're buying tokenized assets, it tends to be in stablecoins. And I think for especially the world of investments and finance, anything that's sort of investable today in traditional finance will kind of be brought on chain, whether it's, you know, stocks like we're seeing getting tokenized, or even real estate. I think everything that's sort of investable becomes tokenized in some way.
Yeah, totally. I think it's the biggest opportunity out there. Yeah, I mean, you know, last count, there's 450 million people here. There's like 6.5 billion outside of that world, and, you know, making, you know, Nvidia, you know, against USDT and then putting a perp on it in Nigeria or Korea. You know, you might think exuberant valuations now, but we've never seen a whole new retail pool of emerging markets come into it. And like there are small, like you know, sort of Robin Hood style companies in India and Korea, and but like, you know, Korea has, I think, like something like 2% of retail shareholders in Tesla. Yeah, there's a huge opportunity, and obviously that's in the big cap stocks. But you know, you'll be able to take a stock and, you know, that's listed in the US and start marketing it anywhere around the world. And I think that really opens up a lot more, you know, flows to the US. And then, like, you know, tokenizing funds like Andreessen or Sequoia, why can't I buy that? You know, you will be able to soon.
Yeah, absolutely. I mean, Exodus, we were the first public company to tokenize our common stock. We did that all the way back in 2021. And frankly, it hasn't seen its time, but that time is if it's not now, it's very, very soon, because it allows that disintermediation of CD&Co and the DTC brokers, all of those intermediaries between the user and the exchange. And you know, you will be able to trade stocks. It's almost essentially like you would trade crypto. There would be some you know, barriers to make sure for regulations, because stocks aren't bearer instruments. But you know, stable coins really are like the regulation, and then stable coins are the linchpins that are really going to allow that and allow that acceleration. I used to say it would take 10 years. Now I think it'll take 3.
I should say as well, people like trading 24/7 in crypto. I have to explain to my kids that there's like, market hours,
Right.
That's going to change with tokenization.
Right. Yeah, I agree. I think that's all the time we have. So thank you to the panel, and I appreciate you all being here.
Thank you.
Thank you.